Hello and welcome back to Diamond View, where we research the top digital assets in the space. Today we're looking at Time Wonderland. Before we dive in, this is a very high-risk, speculative asset, and as always, this is not financial advice. Please do your own research before investing. Please excuse our bootleg slides to get our thoughts down. The PDF will be available for free down below in the description. Let's get right into it. What is Time Wonderland? Time Wonderland is a fork of OlympusDAO on the Avalanche network. It is a decentralized reserve currency protocol backed by a basket of digital assets within the Treasury. The intention of the protocol is to detach from the traditional finance world. One can either stake or mint time assets and receive token rewards. Just like OlympusDAO, the 3-3 game theory is imperative to the protocol's success, where essentially both parties staking is very beneficial and both parties selling is very bad. The protocol is backed by a growing DeFi ecosystem called Frog Nation and a large treasury which acts almost as a venture capital fund, investing in different projects in the space while backing up the Time token. The big draw of this protocol is obviously the super high attractive yields, which is leading to large-scale marketing exposure and a thriving community. Looking at the current APY of the protocol, we can see it is around 70,000%. You might be asking, what is the catch? How exactly does this work, or how is this even possible? Stakers benefit from supply growth as new time tokens are minted, and they receive auto compounding memo tokens as rewards at the current APY. Returns are distributed every 8 hours. This means your balance will auto compound every 8 hours every single day.
Here, where the fuck does this API come from?
APY.
Like everybody's like, oh, how is possible? Oh, the fuck. But it's printing, so I'm staying.
Is it a
can't
Ponzi?
be real.
Is it a Ponzi?
Yeah. Well, I guess.
Let's break it down even further. There's really two key concepts here to make this protocol more simple to understand. The first key concept is that 1 MIM, or magic internet money, which is a cross-chain stablecoin pegged to $1, is equal to 1 time. A memo or memory, which is just the staked version of time, and the rewards that stakers receive, is also 1-to-1 pegged equal to 1 time. Here's an example. You invest $1,000 into the protocol. Only $1 is actually used to back up 1 time. The rest of that money goes to the current stakers and to the treasury balance. The second key concept here is an important point that I think a lot of people are missing. Stakers are not receiving a 70,000% APY on their dollar investment. They're receiving a 70,000% APY on the token balance. This might seem obvious, but it's very important to note this difference and look at the protocol through this lens. For example, if you were to stake 1 token in 1 year from now, assuming the current APY stayed the same, which it most likely won't, but it'll be lower, but for this example's sake, we'll say it's the same, you would have 700 tokens. Then, based off the dollar price of the time token at that time, that is your total balance. The price of the time token is like any other asset, and that is based off supply and demand, with an added benefit of the treasury backing it up and acting as a potential floor price. The protocol itself is inflationary, meaning as more tokens are staked or minted, more are generated, causing a greater supply and causing the price to lower. Due to this inflation, the APY will decrease over time, but again, time holders are okay with this as it is actually intended and built into the nature of the system. This inflationary mechanism versus deflationary is actually ingenious. Token burns are limited, as there will be a point where you can no longer burn any tokens. On the opposite of that, this inflation protocol can run indefinitely. Despite all the uncertainty of these DAO protocols, we are lucky to be able to look to OlympusDAO to use as a historic example. For over a half year now, the protocol has been financially successful for participants and is still going pretty strong. It is still very early with both protocols, but we believe the newer fork Wonderland is an even further upgrade from OlympusDAO or any of these other copies that are coming out. What is the difference and what really sets Wonderland apart? For us, it's really 3 things. First, it's that the protocol is launched on the Avalanche network versus Ethereum, which should allow for easier access, more mass adoption by not having to pay large gas fees while transferring, staking, or minting assets. We also believe Avalanche in general could see some increasingly greater adoption as being a faster and low-cost network while also being pretty secure. Second, the leader and the creator of the protocol, Danny Sesta, has a proven track record of creating top DeFi projects and is one of the main thought leaders in the whole crypto space. He's the founder of Popsicle Finance, Abracadabra, MIM, and Wonderland. All of these are intertwined to make a potentially game-changing Frog Nation ecosystem that we touched on earlier that can benefit time holders. Overall, I really resonate with Danny's vision to move away from the banks, the suits, and to try to amass wealth for the protocol participants through long-term staking. The third reason is the large treasury and the quick movement of the management team. The co-founder Sifu continues to make great financial decisions as the leader of the treasury. Although right now the protocol is centralized, it is not necessarily a bad thing if the team can continue to make the right moves. They are building a huge treasury to invest in more projects to create wealth for all time stakers. Wonderland does have plans in the future to move towards more of a decentralized governance model. Let's now look more into the treasury as it's really core to this whole project and the potential growth prospect. Again, the treasury is super critical to the success of Time. It's helpful to have a protocol where they can fall back on a large treasury for any possible issues. Even if the price were to drop all the way down to $1, rebases and runway will still come in enough to make many positions profitable depending on time horizons. In the future, the team has plans to add a revenue sharing model where stakers would receive treasury profits on top of the 8-hour rebases. This could be potentially huge, and I don't know of another existing DAO with these kinds of plans. The team is first looking to invest in a sports betting platform. They've already sold their position in AVAX at basically the top, and also buying CVX, which has been a very profitable position so far. It seems like they're making the right moves and building the Frog Nation ecosystem in the right direction. Obviously, there are still huge risks associated with this project, but we believe the massive potential returns, they are substantiated. You are betting on that the protocol does not get hacked against potential regulations, that the APY will stay relatively high, that the price of time does not completely tank while staking. Remember, you can do everything right and still fail because of external events that are out of the control. Even still, depending on how many days you might have staked, you can still be profitable even if the price falls. Again, this is more of a long-term play, and we suggest playing around with the calculator numbers if you are worried about this. It is important to note that the calculator APY figures will most likely be lower than the current percentages. And again, the price could be totally different depending on various factors. Remember, these numbers are always changing. If the APY goes down over the life of your investment, then your tokens will only stake at that new rate, not at the rate that was around at the time of your initial investment. It is still fun to play around with, but don't expect some of these crazy earth-shattering returns that are shown here. Something else to note which helps mitigate risk is that stakers have the ability to unstake their time whenever they want without any penalty, as there is no lockup period required. A common question that stakers have is what happens during a bear market? Well, since the treasury is in digital assets, its value will probably go down, meaning the runway and the backing per time token will also go down. Sifo did note, in a potential case like this, the treasury would buy back time tokens and burn them to stabilize back to the listed backing price if it ever fell below. If you are worried about these risks, a potential smart strategy could be to put a small percentage of your portfolio into time. At the current APY, wait about a month or two until your investment doubles and then take out your initial investment. That way, you're just letting the rest ride totally risk-free with house money. In conclusion, is it just an elaborate Ponzi scheme? Well, depends exactly on your definition. For us, the main idea is that it is a bet on the team, on Danny, on Frog Nation, the treasury, and the investment decisions that they make. The risks are massive, but so are the potential returns. Early adopters will be rewarded, but remember, no one knows the definition of early here. It is important to understand, though, that this protocol is only a few months old. It is very dependent on market conditions. If there's an extended bull market, I think this could do very well, and vice versa. Something else to note is that time stakers should understand the mechanics around the protocol as discussed earlier. Just because you see the price or APY going down doesn't necessarily mean that the project is failing. It is actually built into the nature of the system, which is why we made this video in the first place. Please share this video with someone who doesn't understand that concept. Lastly, overall, just have fun with it. It's a super interesting experiment where you can be your own bank, and I don't think anyone really knows the future of this, even the team that built it. We are all learning together as we go. I personally think it's a fascinating experiment, and I'm happy to be part of it for the longer term, and will continue to update you all going forward. Based on the current risk and reward factors as we discussed, we gave it a rating of 86 overall. We'd love to hear your thoughts on Wonderland, and if this video helped you, comment down below. If you would like a tutorial on how to actually buy and stake time, we created a video on that. The link for it is down in the description. We also will be researching and rating the top digital assets in the crypto space all year long with new videos every week. An NFT of the assets we review will be sold in our collection on OpenSea at the time of each video. We are creating a crypto trading card game. Go check out the Time card, which is now available for purchase. To not miss a future video or update, please be sure to subscribe. Thanks a lot, hope you enjoyed the video, and we'll see you next time.